What does the labor market have in store for us in 2024? Well, stick around because in this video, I'm going to share with you my thoughts on what we could expect to see in the coming year. Hey everybody, it's Brian from Life After Layoff and welcome to 2024. In my last video, I talked about what happened in 2023 and I want to take that a step further and now let's look at what we can expect to see in 2024. And if you want more content just like this directly from a corporate recruiter to assist you in your job search in 2024, make sure you hit that subscribe button. So what trends can we expect to see this year in the job market? Well, let's talk about the big one is it going to be a good labor market for a job seeker? And unfortunately, I think we're going to see a slow and steady decline in the amount of jobs that are posted, and in particular, the good quality jobs. So let's take a look at some of the data. Now, this particular chart shows the hiring or employment rate over the last 20 or so years. And we can see some interesting things on this chart. In 2026, this is right before the subprime crisis, the real estate crisis that happened in 2028, we can see that there was a pretty massive decline in the number of hires or hiring activity across all industries. So it went from a rate of about 4.0 right before it and then ended up at about a 2.8. So that's just to kind of give you some historical context as to what the standard rate has been. So after that event, over the last decade or so, you see a steady increase in the number of hires. And then of course we get to the pandemic and things go absolutely haywire. And so you can see that it jumps up all the way to 6.1% as we have a bunch of layoffs and then a bunch of hiring that kind of whiplashes right back. This is the pendulum that I talk about swinging back and forth. Right after that, the market obviously can't sustain these massive whiplashes, so there kind of was some stabilization, but you could still see a lot of hiring activity in 2021. This is the buyer's market, this is the Great Resignation, all of these different things that were happening during this period of time. It looks like the gravy train ended in November of 2021 where we had a peak of 4.6%. And then there's been a slow and steady decline since then of hires. We can also extrapolate it as the number of job postings that are also being published during the same period of time. But as you can see, it's been a slow and steady decline over the last year or so. Now, this chart only goes through September of 2023, but the trend has continued to go downward. So I'm expecting to see it decrease to somewhere around 3.2 to 3.5% as we saw through much of the last decade. So we still have a little bit of retracement left to go, and that's going to mean that there's going to be fewer job postings and unfortunately fewer jobs throughout the next year. However, the good news is that even though we're going to see less hiring, I also think that we're going to see less layoffs overall. Now, here's an interesting stat on layoffs that I found to be surprising. The layoff rate is actually historically low right now, and it doesn't feel that way for most of us who have gone through 2022 and 2023 and experienced a lot of these layoffs ourselves, but the numbers don't lie. We're actually at a lower layoff rate than we were pre-pandemic. Of course, there's been some spikes throughout 2023. You can see on this chart that there's a spike up in the latter quarter, which probably reflects the kind of the run-up of layoffs that we saw heading into the final couple of months of the year. The fact is that 2022 and most of 2023 still stayed below the average of 1.2%. So I think that we're going to continue to see layoffs be relatively low. I think companies have kind of figured out where they want to be with total headcount. We're just going to see less hiring. And so a lot of the attrition that we'll see won't be through forced attrition, but it'll actually be somebody quitting and then just them not backfilling the role. And as an extension of that, and I mentioned this in the last video, I still think that we're going to see a continuation of these short-term assignments, contract roles, part-time jobs, seasonal work, that sort of thing. I think you're going to see companies that will continue to be less committal because they don't have to pay your benefits. In some cases, they're getting away with paying you less money and they're replacing people with cheaper options. And we've seen a lot of that happen over the last year. So as we continue to move into this year, pay attention to the types of jobs. A lot of times these companies would eliminate a position and then repost it a few months later as a contract role or maybe as a lower level position where they're kind of downskilling so that they can pay less for the job. Thinking like recruiters, for example, there was a lot of really great recruiting jobs that were in 2021 through the beginning part of 2022. And you kind of couldn't trip out your front door without landing over a great offer. But it seems like most of those jobs have dried up and now they're being replaced with contract positions that are paying 60% of what the previous rate was. So a lot of these people who had kind of adjusted to a certain lifestyle, suddenly found themselves with a pretty serious pay cut, and now they have to adapt to it. Keep a pulse on what's going on, and unfortunately, I think that we're going to continue to see this play out as we go deeper into 2024. And keeping right in line with that, unfortunately, I think that we're going to continue to see downward salary pressure. So these big raises that people got accustomed to in 2021 kind of seem like they're a thing of the past. If you look at the data on this one, you see that posted wages are growing faster than prices, which is good. However, the wage growth overall is slowing down significantly over 2023, most of 2022 into 2023. And unfortunately, I think that this is going to be a continued trend throughout 2024. The variable here is going to be the inflation rate. As you can see on this chart, in 2021 and 2022, you saw wages marketably higher and way above even the inflation, the runaway inflation that we experienced, because it was a very competitive labor market. Everybody was looking to hire the best. They were kind of feeding frenzy, and that was a great time to be a job seeker. As we hit the peak of 2022, 2021 into 2022, we started to see inflation continuing to climb, but we hit that pinnacle or the crescendo, and we started to head down, and it's been a slow and steady decrease in wage growth over the last 18 months or so. But it looks like for the most part of the latter half of 2023, wages seem to have outpaced inflation, because inflation has apparently dipped. It doesn't feel like it when I go to the grocery store, but apparently inflation has dipped. But I wonder where these numbers will track as we head into the first and second quarters of this year. I kind of expect to see a jump in inflation again as we get into election year and they kind of loosen some things up, or interest rates and all that kind of stuff. And with wages continuing to go down, it's a employer buyer market. They have their choice of people. I think you're going to see it kind of cross lines here. And unfortunately, it's not a great thing if you're a job seeker in 2024. The next major thing that I think we're going to see is the settling of the war on remote work. We've seen these companies kind of slugging back and forth with employees, and CEOs demanding that employees return back to the office or else. Anything like Amazon threatened people's jobs and said that you don't have a future, and all these other companies in the financial sector and all this kind of stuff. But then you had employees that were trying to fight back as best they could. And it looked like there's kind of this tug of war going back and forth. And at one point, it looked like the employees were winning. Then it looked like the companies were winning. Then it kind of going back and forth. And I think what we're finally seeing is that there are some CEOs who have admitted, maybe this isn't working out so well, kind of maybe waving a little bit of the white flag, which is a great thing if you're somebody that's interested in remote work. Do I think that this is going to turn into a remote first culture again? Unfortunately, I do not think we're going to get back to that point, but I do think we're going to find an equilibrium with a hybrid work model that will be more commonly accepted. So it might be you come into the office for 2 days and you work remote for 3. Now, this is good news if you're somebody that can't make the commute every single day, but it still could be bad news for somebody that's sitting pretty rural or maybe moved away from a work population during the pandemic, and now you're suddenly forced with a lack of job opportunities or lack of high quality job opportunities, and now you're not really based near any of them to even commute to. So as we go into 2024, you may want to start to factor that into your job search if you need to get relocated back to an employment base so that you have some options to work with. The next common theme that I think we're going to continue to see is this idea of loyalty being dead on both sides. It's not just the employer. They've kind of put a line in the sand. They've decided to lay off everybody. Even the most hard and fast people who survived round after round found that they were also on the layoff block in 2022, 2023. But on the flip side, employees also found that loyalty doesn't pay off. So as a result, I think that you'll see that people are not nearly as tied to a single position before. And we can only hope that as more and more people have short-term stints in their job history or their recent job history, that it'll start to become more commonly accepted, because frankly, you're not going to be able to recruit people without having some of that in their job history. And possibly some of the hiring managers who might be hiring you also have short-term stints now because of this lack of stability. Furthermore, I think people are more willing to quit jobs that they no longer see a future with, or that they feel that they align or resonate with their corporate mission. I think the Great Resignation kind of shook people up in that regard. Of course, it's a double-edged sword because there's not as many jobs, so you have to be careful. And I think you're seeing less people voluntarily quitting. The data supports it, but I think we'll find an equilibrium this year where people are learning that you don't have to stay with a job where you're well past your expiration date. And I think we'll also see a slowdown of employers whose first knee-jerk reaction is to lay staff off when things get tight. And as I mentioned earlier in the video, I think you're going to see this as people not necessarily being laid off, but companies not necessarily hiring as many people. Now, Age in the workplace is going to become more and more of a topic as we go into the next decade because the workforce is aging and there's not as many people coming into the workforce at the younger levels or the less experienced levels. Furthermore, people who are already retired came back into the workforce in droves as a result of the pandemic and what it did to their 401ks. But as things stabilize and these people now decide to retire for good and the rest of the workplace is aging out, we're going to see a major increase in demand for certain roles. So we have to think in terms of what jobs are going to be vacated as people finally end up retiring and they're leaving these gaping holes. Employers are certainly stressed out and thinking about that. And that's going to be the next trend that I think we're going to continue to see. We saw this very disruptive concept of AI coming into the workplace. It's making its introduction through ChatGPT and a lot of other things. And we've seen some companies that have really embraced taking a long and hard look at how AI can be used to supplement and then possibly replace some of their workforce. And I expect that this will be a continued trend where AI is going to be the rage in 2024. Companies will be aggressively looking for how they can leverage these tools in a more effective manner. Now, this can be a direct threat to a lot of people in the job market. And if you're not paying attention and you don't think that it can happen to you, you need to open your eyes up. And I would suggest you take a really serious look at your job and whether or not there are aspects of it that can be outsourced to an AI bot, because I guarantee you your company is doing that right now. However, it's not all gloom and doom. And if you position yourself correctly, you can leverage the tools of AI to make yourself indispensable. And in fact, I think we're going to see an emerging job type that will be very popular in machine learning and leveraging AI. So if you look around your workforce and you see people that can be easily outsourced, I might suggest that you learn the tools that will make you more indispensable because you'll be the expert in AI in your specific genre or your specific vertical. In other words, you need to adapt or risk being left behind. And I think this is going to be a much more prominent theme as we head into the latter part of this year. So take this one seriously. So in summary, I think that the job market has some interesting trends emerging. I think we should be eyes wide open. I don't think it's going to be the best job market for the average job seeker, but it's not necessarily going to be horrible either. Use this time to reskill and retool yourself so that you can make yourself indispensable and also layoff proof. And I'll be speaking about that in more detail as we head into the first part of this year. But if you're somebody that's ready to take the bull by the horns and make this the best possible year for yourself, it's actually something that I specialize in. I've got a website called lifeafterlayoff.com. It's loaded with insider tips and tricks all on recruiting and careers. So if you're looking to skill up and learn how to market yourself in the most effective way, make sure you check it out. I share my deepest and most intimate knowledge in the form of some training courses. First one is called Resume Rocketfuel, and it's going to teach you how to build that future-proof resume that can make you stand out in 2024 to those hiring managers with less job postings. Listen, even though AI is really tempting and there's lots of great tools like ChatGPT, it's not the be-all end-all. You have to make sure that what you're putting into the system is good. Otherwise, it's just going to spit you out a bunch of customized crap. So that's why it's so important to learn how to write a resume that gets the attention of these employers, and then leverage tools like ChatGPT to assist you along the way. But once you get into the interview process, it is up to you to market yourself effectively so that you can land that dream offer. And that's where the Ultimate Job Seeker Bootcamp comes in. It goes from job search all the way through each round of the interview process. We break down and give you exact tips on how to ace each round, then ultimately get you to the job offer. And then we teach you how to negotiate it so you don't leave a dime on the table. That alone is usually worth the price of admission, and we can often get your investment back in the form of a higher job offer. Targeted networking is a big theme in 2024 as well. You need to start leveraging targeted networks if you're serious about getting ahead in your career, and that's where LinkedIn comes in. Created a course called Unlocking LinkedIn that teaches you how to leverage it as a job seeker, and more importantly, how you can skip the recruiter altogether so you don't have to go through these job postings, which are quite literally the slowest way to get hired. But anyway, I'm glad we survived 2023, and let's hit 2024 and make this the best year yet. Appreciate you watching, and we'll see you in the next one.